Welcome to another video in the SAP S/4HANA Fixed Assets playlist. Fixed assets, retirement, scrapping, write-off, and sale all use the same process in SAP S/4HANA. In the video today, I will explain the different business cases and the financial entries included. Let's take an example. In 01/01/2020, we purchased an asset for the value of 40,000. This asset has a useful life of 4 years, so it should be over by 31/12/2023. When posting the fixed asset acquisition, the financial entry is a debit to fixed assets and a credit to the supplier accounts payable or cash. Then over the useful life of the asset, every period we post the fixed asset depreciation, and here the accounting entry is a debit to the depreciation expense and a credit to accumulated depreciation. The fixed asset acquisition value is displayed in our balance sheet under assets in a positive value, and accumulated depreciation is also displayed under assets but with a negative value, and the balance is the net book value of the asset. At the end of the useful life in 31st December 2023, the asset is fully depreciated and the net book value of the asset is 0 because the acquisition value is equal to the accumulated depreciation. But we can still see the asset in our books and it will remain there in our balance sheet. We can see it in the acquisition value and in the accumulated depreciation. Now we want to throw out this asset because it's no longer useful and we want to write it off from our books. How can we do this? This is our first business case, which is a full write-off or a full retirement of an asset that is fully depreciated. Here we are going to post the write-off and the accounting entry will be a debit to the accumulated depreciation and a credit to the fixed asset acquisition value. And since these two are equal, the financial entry is balanced and we don't have any other accounts in this entry. The second business case is exactly the same, but instead of throwing out the asset for free, we are going to sell it as scrap. So for the same fully depreciated asset in 31st December 2023, we are going to sell it as a scrap and we are going to receive some revenue. Let's say we sold the scrap for 500 USD. Here the financial entry will be first a debit to accumulated depreciation for 40,000 and a credit to fixed assets for 40,000 because we have to write off the asset from our balance sheet. Then we have a debit to cash or bank transfer or customer account for 500. This is the amount we are going to receive for the sale, and a credit to a revenue or a gain account for 500 USD. So this is our second business case, and we can call it fixed asset disposal against revenue, write-off against revenue, sale against revenue, or retirement against revenue. They are all the same thing. And when we do the fixed asset sale, it can either happen directly in finance, so we post all the transactions in finance directly without any sales order, or it can happen with collaboration with our sales colleagues, and we are going to create a sales order, then post goods issue, then post billing. It will follow the same order to cash process that I explained before. I will also show you both of these cases in the S/4HANA demo. Now let's move to our third business case. In 1st of January 2021, after 1 full year of depreciation of the asset, we decided to scrap it completely without any revenue. So for any reason, we decided to write it off from our books. Maybe there has been an accident and the asset is completely destroyed, or the asset is not useful to us for any reason and we are going to throw it out and write it off from our books without receiving any revenue. Here the financial entry will be again that we write off the asset in the beginning. So we will have a debit to the accumulated depreciation, but this time the accumulated depreciation is not 40,000 because we are still in 1st of January 2021. So we only have 1 year of depreciation, so the accumulated depreciation is only 14,000. So here we will have a debit to accumulated depreciation for 10,000, a credit to the fixed asset for 40,000, and as you see this time we have a balance because the asset is not fully depreciated. So the difference between these two is a loss, because now the asset still has a net book value of 30,000 and we are going to throw it out. So we lost 30,000 USD. So here we will have a debit to a loss account for 30,000. The fourth business case is if we do exactly the same in 1st of January 2021, but instead of throwing it out for free, we are actually selling it to a customer. And when we sell it to the customer, we can either sell it for a gain or we sell it for a loss. So let's say in 1st of January 2021, we decided to sell the asset for 35 USD. Here the financial entry will be a debit to accumulated depreciation for 10,000, a credit to the asset account for 40,000, so we wrote off the asset from our balance sheet, and then we will have a debit to the customer accounts receivable for 35,000, And the difference is a credit to gain account for 5,000 because we sold the asset for 35,000 while the net book value was only 30,000. So we gained 5,000 USD. So the difference is posted to a gain account. The other possibility in this business case is that we sell the asset for a loss. So let's say we sold the asset in 1st of January 2021 for the value of 25,000. So this is less than the net book value of the asset at this time. Here the financial entry will be a debit to accumulated depreciation for 10,000, a credit to the asset for 40,000, and then we have a debit to the customer accounts receivable for 25,000, and the difference is a debit to loss for 5,000 because we lost 5,000, which is the difference between the net book value of the asset and the amount that we received from the customer. And these are all the business cases for full fixed asset retirement or sale or disposal or write-off, which means we fully write off the asset from our books. The same business cases exist for partial asset retirement. So instead of fully writing off the asset from our books, we want to write off only a part of the asset. For example, let's say we have a production line and we created all of the production line as one fixed asset, but then we are going to sell a part of the production line. So we want to partially sell an asset. Or maybe the asset that we had a small accident and a part of it is destroyed and we want to write off a part of the acquisition value of the asset. Or for any reason, maybe we actually, when we posted the asset acquisition, we posted an extra value by mistake. So the asset was for 30,000, but we posted an acquisition for 40,000 by mistake, and now we want to write off the 10,000 difference. All of this is the same. This is partial retirement or partial asset disposal or partial write-off or partial sale. So these are exactly the same business cases as the others, but for a part of the asset. And the accounting entries will also be the same, but with different values because we are only retiring a part of the asset, not all of it. So let's say, for example, that we have the asset on 01/01/2021, so 1st of January, after one full year of depreciation, and we want to write off 25% of the value of the asset without any revenue, without any returns. So here it will be a partial asset retirement without revenue. The financial entry will be a debit to the accumulated depreciation. Here the value will be 10,000, which is the accumulated depreciation value, multiplied by 25%. This is the amount we are retiring. So the value will be 2,500 in accumulated depreciation, and a credit to the fixed asset acquisition value. And instead of 40,000, it will be 40,000 multiplied by 25%, which is 10,000. So we have a credit to assets for 10,000, and the difference will also go to a loss account. So we have the difference 7,500 in debit posted to loss. The same applies to all the other business cases I explained. They will use the same accounting entries, but with different values based on the percentage we are retiring from the asset. And also, instead of using a percentage, we can use a value. So for example, instead of saying we want to retire 25% of the asset, we can say we want to retire 5,000 of the asset. Both of these will work for SAP. A very important note when it comes to these accounting entries on SAP S/4HANA is that SAP will post two different accounting entries for the asset sale. So when we sell an asset, we will have one entry with a debit to the customer accounts receivable and a credit to the asset sales account. And then we have another entry that will write off the asset with the debit to the accumulated depreciation, credit to the asset value, and the difference either to a gain or loss account, which means that in SAP we have to use an additional intermediary creating accounts in these accounting entries. I will show you all of this when I demonstrate the process on SAP S/4HANA. In the next videos in this playlist, I will demonstrate all of these cases and the accounting entries on SAP S/4HANA 2021. There are some videos that will only be available to the channel members. You can find them in the playlist, and if you would like to watch them, then check the channel membership program. Thank you for watching, and I'll see you again soon.